What's up, everybody? Welcome back to the channel. Today we are talking about a trade that cost me big. And when I say it cost me, this trade had the potential to be one of my probably biggest winners that I've had on my trading in easily like a year plus. This trade had so much potential. It was ready to run. I had the trade set up, everything was lined up, but this one mistake cost me so big. So in this video, we're going to talk about it. We're going to show the trade, show the step-by-step. I'm here with Frank, my friend here. He is a regular contributor to the content here at A1 Trading, and also one of our lead analysts and writers in our newsletters and things like that. So Frank, prepare with me for this. This is rough. So today we're talking about a trade that I took on Euro NZD. I'm on the overview slide, and I'm looking at this. I'm saying, okay, this is a trade that cost me big time.
Dude, I'm looking at it right now.
Yeah.
I'm looking at all that red.
Oh yeah. So here's what happened. So we're going to talk about in this video, we're going to talk about the things that did went. There were some things that I did right, but there were some things that went just absolutely terribly wrong with this idea that I had. So on slide number 3, I want to show you guys this trade. So I had this idea that I wanted to short Euro NZD, and I wanted to risk just like 30 pips, nothing crazy. And Frank, you're short on the Euro right now. So I kind of had a similar thought process to you. You're on, is it your Euro dollar?
Yeah, Euro USD. I just got in this morning, but things are looking good so far. So.
Yeah, so the Euro, we've had this bias, right, with everything going on with Russia and Ukraine. Things have been looking good to the short side on the Euro. So I went short on the Euro NZD, thinking, okay, everything lined up, the Russia-Ukraine situation, Euro proximity. I want to kind of be away from the Euro and buying some of the other safer assets out there, which, believe it or not, right now, the Kiwi and the Aussie dollar have been like the strength havens. It's weird. It doesn't really make any sense to me, but Frank, so check this out, man. Next slide, I want you to see the setup because it was a doozy. Like technical analysis wise, that trade
looks good. That resistance, like minor rejection on the candle before, and then a big rejection on that current candle.
Right.
Looked nice.
So this is a 30-minute chart, and price is pulling back to the trend line, and I decide to take a sell. And my stop loss, what do you think about the stop loss? The stop loss looks tight. Does it look reasonable? What do you think?
I would say reasonable. It doesn't look like... It's like right above where you would probably want to get out, so I would say that's pretty good.
Because I was thinking with the 61.8, like if it breaks that 61.8, I'll just get out. Like that's my break point. So if we go to the next slide, Frank, check this out. Here's what happens. Price comes up. This is so annoying, right? This happens to like all of us at some point or another. Price comes up and just politely taps my stop loss, takes me out of the trade. I'm in it for a loss now, and I think whatever. I guess my entry was just not as good as I thought it was. That's kind of my thought process. Now, if we go to the next slide, you can see a little bit of craziness happens. We see some volatility, that massive spike. Yeah, and those, Frank, I think those are commonly referred to as like stop hunts or liquidity grabs because they're just like these big ridiculous moves that get erased every once in a while.
Yeah, so do you know what happened here? Like what was going on in the news?
So I think that there was just some, probably what happened was just like reaction to the Russia-Ukraine news, because at this time that was like headline after headline, just reacting to stuff like that.
Look at that. Oh, I didn't even see the wick there.
Yeah, see that?
That's
I know.
crazy.
Well, and when I was looking at it, it was about that fast. It was like it was there and then it was gone, like really, really fast. And so, of course, I get totally wiped out on my trade. And I'm looking at this and I'm like, wow, you know, of course, my entry must have been early. But at this point, I'm thinking, I'll look to get back in. I'll short again. Like, I still want to be short.
Right.
That rejection was huge. Looks like a real big wanting to, you know, fake out the buyers and go back the other way. That's kind of what I was thinking. So I was looking for a trade setup. But if we go to the next slide, I never got the entry. And watch what happened. Do you see how much sell-off happened right after this area? You can actually see if you look on the left-hand side of the screen, you can see where it says my sell trade and where I got stopped out. And it just went on without me. And the reason I say that this cost me so much is because my entry was not that bad. I just didn't get a chance to re-enter, so I took the trade and then it ran off without me. if we go to the next slide, it doesn't get any better. It gets worse. It goes down for like days straight. So at this point, I'm thinking I want to get in, but I can't. I can't chase this thing. I need a technical entry that makes sense to me. And if we go one more slide, man, it just doesn't stop. So now, Frank, look at this. On that sell trade, look at the little, like that price action that we were just analyzing a minute ago.
That huge move is nothing now.
That's what I'm saying. So what happens here is that my entry, had I stayed in that trade, I mean, it would have taken a little bit of good fortune and the market gods being a little nicer to me. But had I stayed in that trade, let me put this in perspective. That initial sell trade, Frank, I risked $200 on that trade. Imagine if I had stayed in that sell trade, what that would have been on the downside, like, or on the.
Yeah, you would have caught it crazy. But
that would have been like.
That's so tricky because I don't know. That would psych anybody out.
Yes.
It definitely touched way higher than it had been in like the last day or so, only to come straight back down. Yeah, that's just tough. I don't know what to say there.
It is hard, and the reason I bring it up, the reason I like want to talk about this trade is because I think that as frustrating as this is, it's something that probably a lot of us can relate to. I don't know if anybody has been gaslit this bad than me. Like, this is horrible. Like, this is like a trade that you want to be in. This is an account changing trade because, you know, the style of trading that I use, and, you know, sometimes we talk about like trailing stops and things like that. I trail stops. Like, as long as it wants to run, I keep going with it. So had I held on to a trade like this, of course there's the shoulda, woulda, coulda mindset, but it would have been a crazy, insane trade.
So maybe something we could talk about in the future is, I guess, possibly, I know stops are very important, but had you not had a stop on here and you let the trade run and you even looked away from your computer for like an hour, you would have come back to seeing that. But at the same time, I don't know. It's a double-edged sword because you could definitely come back and see your trade all the way up here.
Right. And I think that that's a temptation too, is like, you know, what am I going to do next time to avoid this? And the truth is, there's not like an easy answer, because I guess it could have rallied, especially if there was, we've talked about this recently with what you mentioned on our previous conversation about your Aussie yen trade. Had there been any like peace talks or like reversing like conversations that were had with Russia and Ukraine, the trade would have been, you know, gone sour.
Yeah.
So I don't know. I think there's something to be said here. There's some pros and cons. So if I keep going, I want to just talk about the fundamentals and see what you think on this, because we're kind of on the same page with the euro and the whole situation with commodities and Russia. What is your thoughts right now on the euro? I want to, so because you're short euro dollar and you're actually profitable, unlike me guys here. I just got wiped out of this trade.
Profitable for now.
Right.
Yeah, I mean, I'm short because, well, other than what's going on in the world now, I would say that euro is probably one of the most bearish, like, for the year, in my opinion, because their steps towards like any sort of policy tightening is very slow. And, you know, England, US, New Zealand, I think even Aussie is like, they're already taking that, like, those steps to raise interest and like get more involved, like monetary wise, and the euro is still very loose in their policies. Right,
for sure. And that's like the first half of it, right? Because the second half is, of course, what we just talked about, the Russia and Ukraine war situation. You know, I like to think of it as, if you literally think like on a map, proximity wise, Europe is right next to that whole situation going on, and they trade so much with Russia. Like Russia, I think is like, it's like 11, I may get this wrong, you may need some fact checkers in the chat, but I think it's like 11% of the global like output of like gas and oil comes from Russia, and a huge importer of that is places like Germany, France, all those countries, they work with Russia.
That's interesting. I didn't even think about it. What about Japan then? Because we talked earlier that Japan was a big partner. What do you think? Who do you think like has the bigger impact trade-wise?
So I think Europe and Russia, in the last, from my understanding of this, and there are people who are more qualified on this than I am, but in the last 30 years, I think that Russia has increasingly become, their economies have become binded with those Eastern European and just European countries in general. From a proximity standpoint, it makes sense. They have to move that oil from somewhere to somewhere. Those countries that are surrounding, that they're peaceful with, they're major partners. And Germany is a huge one with Russia. So when Germany, which is the powerhouse economy of Europe, when they start putting sanctions on Russia and saying, hey, we're going to stop production, we're not going to take your oil, that sort of thing, it puts a huge supply line issue, which is why we've seen oil dramatically increase so much. But on top of your point about the euro area already kind of lagging in the monetary policy standpoint, the euro just does not look super attractive. So I don't know. That's kind of my take on it overall. But so anything else in terms of fundamentals that I wanted to mention, I pretty much put on this slide. The main points were sanctions, heavy impact on the euro region, war concerns leading to investors moving into USD, which, what do you think on the dollar right now?
It's weird. I think because of the conflict and the uncertainty that the dollar will probably see like more investor demand, but I'm not I couldn't tell you for sure because I don't know how to put this the right way, but it's like stocks in the USD always move seemingly opposite of each other, and the market is very volatile. It's going both ways pretty hard, so it's really hard to pick a direction. But I would say if conflicts continue, and we saw today that the ceasefire talks didn't work, if things like that continue to prolong, I don't think that we'll get more of an idea of the direction going forward. So I think USD's probably our safe bet, our long bet if we were to try to trade it.
That makes sense. And I think kind of same thing for gold and oil, which we've been discussing as well. With that last video that we discussed, we talked about the Australian dollar and their correlation to the commodities market being hot. So that's kind of the fundamental world that we're in right now. So with this trade, if I go back to the next one, what went wrong? On this slide, in hindsight, this is what we were saying. Hindsight's a dangerous game to play. Some of you guys may get caught up in this same concept, but in hindsight, my stop loss was too tight. You can play that game of, had I stayed in the trade and, if it moved in my favor sooner and if it didn't wick me out, I would have been in a several $1,000 trade just off of risking a small $200, which small is relative to the account, but for the account it was nothing crazy. So of course you can play that game. It's definitely dangerous. Fundamentally, what we just discussed, that idea, you're short on euro dollar, you're in profit right now. I was looking at euro NZD, I got stopped out, but both of us kind of fundamentally have been correct. The idea has been go with the flow. So short bias on the euro. What could we do differently? And you kind of made some points already with, placing the stop loss with that high volatility, idea that you just talked about, the S&P 500 rallying and dipping like that. Are you thinking that it's a good idea to think about widening your stop, reducing your position size? How would you approach that stop loss component?
I do think that stops in this case should be way more aggressive than is it aggressive?
Wider,
yeah,
safer,
basically increase your risk on the stops, but decrease your risk on your leverage and your lot size, because in the short term you can't really tell where they're going. Euro NZD took off before was it 3 days of declines.
Right.
So it's like picking direction seems to be like successful for us, but the problem is in the short term we don't account for all the noise, and that's just a fact for like every trade you make. But in times like this, like very uncertain and things can go either way, like in the meantime you're gonna probably have to tolerate a lot of the potential drawdown if your account can handle it.
Yeah, I think that's actually a really good point. Like the point that you made about, okay, increase the size of your stop loss, reduce this position size, because exactly what you said, the fundamentals, we were both kind of correct. Now, like I said, you're in a trade where you're in profit. I got stopped out because of some noise. What you made a point about may be very, very important. We have the fundamental direction right, but we just need to make sure that we don't get stopped out by noise. And that noise is amplified. There's like more noise during a time like this where you're just getting stopped out of these trades that you could stay in had you just, taken a step back, a little bit of more of a swing trade approach, not trying to scalp this move, but trying to just, because that's kind of what I was doing. It was like very, very short term. I was trading a 30-minute chart. I don't even usually trade the 30-minute chart, but just kind of going with the flow.
But you were so right about it. Like if you had held on to it, I mean, bet you would have been pretty happy. But like,
yes, I would have. I shoulda, woulda, coulda. No, but no, it's true. But the point is, the reason I bring this up is because I think we can both benefit from it, and probably a lot of people at home watching this. You gotta think there's people who probably feel the same way. They're like, wow, I so had a strong feeling or a strong, fundamental bias that gold would rise, but I got stopped out on a quick noise move on the 15-minute chart. So some really practical good tips in my opinion. What you pointed out, widening that stop, reducing your exposure in terms of position size is really, really important. So I'm looking at the psychology slide, and this is a really frustrating experience. Can't tell you how many nights I've spent laying in bed thinking about, had that trade just gone in my favor, I would have made so much money.
Just don't think about it.
But that's the thing, right? It's a human experience, but you're right. Like you've got to learn to just accept when things aren't gonna, like when you get stopped out of noise, it's gonna happen. It's it's annoying, but perhaps you just adjust and you go forward.
Yeah, like remember the experience and forget the feeling, so next time. It's hard to do though.
Yeah, it is. No, but you're right. Remember like the lessons that you learned out of it. But so again, part of the frustration for me too is that these moves that we're seeing right now are rare. Like these kind of follow through moves that we've been seeing, and Frank, you've been seeing them too. We've been looking at the charts. These follow through moves, like these huge trends, there's wild pullbacks. There's some wild noise in there, but the overall trends are like massive.
If you were to zoom out, and those massive skips that you run into that stop you out or scare you end up not really being so big in the end.
Yeah, exactly. So it's kind of just taking the circumstances and trying to adjust for them. Now, the next slide is what I did right, because I do think that although, of course, the trade resulted in a loss, there was something that I think that is worth recognizing that I did right, so that we don't like screw up next time, because you don't want to get frustrated and then just do terrible decisions. I took a loss in the trade. The trade was small though, so I will say the one thing I did is I didn't risk a lot of money relative to the account. I didn't risk like 5% or anything irresponsible. It was really just a small trade. I didn't chase this trade, even though at the time of taking the trade, the move had already started. The Euro NZD had already been trending lower, but I did wait for a pullback. It just wasn't the right time. I probably should have later on looked to re-enter, but the thing that I did right is I didn't risk a lot of money. So it's the worst case scenario here is that I lost a small portion of the account. That's so much better than had I gone long at that same level and just held it forever. That would have been devastating. So and the other thing is just kind of recognizing that there will be more opportunities like this in the future. You just gotta be ready for them. What do you think, Frank? Have you ever had a trade that happened like that? Have you ever experienced like a I just missed it kind of moment?
Yeah. Like all the time.
It's actually more
Think
common.
of one off the top of my head, but yeah, it's a very common thing where you get stopped out and then you're like, well, I gotta wait now.
Yeah.
It's almost like waiting is worse.
Yeah.
It's almost if you just jump back in after. That sounds really irresponsible, but like if you were to do that, for most of my experiences, they would have worked out in the longer term.
Well, you say, yeah, I think like it does sound irresponsible if you're just like throwing it, but if you're like, okay, well, like that trade, right? If we go back for just a second, let me pull this back up, just to the point that it stopped out, right? Or the big wick happened. Had I looked for a reasonable opportunity to re-enter, it would have been an excellent, opportunity. And there was some signs of huge selling after that candle close red, after all that bullishness. That's like, in hindsight, it's a major, signal of strength for the bears. So, it's just one of those things. You take from it, you learn from it, and you apply it in the future.
Yeah.
But
and at any point in that like trade where it went up, came all the way down to the bottom of that fib level,
mm-hmm.
if we skip forward a few slides, like none of those, the entry doesn't really matter if you were to look 2 days later,
right?
Which is crazy to think about, but like it's very hard to see that short term.
Yeah, for sure. And those kind of moves, like I said, they're very rare. But if you can get a trade that's moving like this in your favor, those are really the best trades. But you made a good point. Like if you had a really good fundamental reasoning and you really, you believe that the analysis that you did is correct, but you get stopped out, there is nothing wrong with looking for a calculated way to get back in, re-enter, still keeping your position size small, and just, trying again. There's nothing wrong with like taking a couple throws of the dart to try and get it on the board. Sometimes you got to try a couple times. So Frank on the Telegram channel, the newsletter, all that sort of stuff, he's our primary guy. So if you're not already, make sure to subscribe to the free stuff that we've got down below in the description. And if you'd like to see the trades that we're taking in real time, you might see me take a trade like this. It's a little bit embarrassing, but it's still going to happen every once in a while. So if you'd like to join the VIP group that we have, we will get access to coaching webinars. You can join our chat rooms. You can hang out with us, and you can also see the trades that we're taking, and more importantly, the full breakdowns as to why we take the trades that we take in real time, sent to your phone or your computer. If you're not already in there, check the link down below in the description. Use that promo code for subscriber discount, and I hope to see some of you guys in there. Frank, thank you for joining me, man.
See you all.
We'll see you guys next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.